What if I told you that some of the smartest investors in America aren't buying more houses, more stocks, or more technology? They're buying dirt, and not just a little bit of it. Bill Gates has become the largest private farmland owner in America, with roughly 242,000 acres spread across multiple states. But here's the interesting part. Why would someone who made billions from software want to own thousands of acres of farmland? Because farmland isn't really about dirt. It's about scarcity. And once you understand what actually happens when someone owns productive farmland, you'll realize they're not just buying land. They're buying an asset that can produce something humans will always need: food. So today, let's break down the real business behind farmland ownership and why wealthy investors are paying attention to something most people completely ignore. Think about a typical building. If demand for apartments goes up, developers can build more apartments. If demand for warehouses increases, investors can build more warehouses. If demand for offices rises, more buildings can be constructed. But farmland has a problem. You can't manufacture more of it. You can't call a contractor and say, "Build me another 10,000 acres of fertile soil." It doesn't work that way. Good farmland needs the right soil, climate, water, infrastructure, and location. And while America's population and food demand continue to evolve, productive farmland is limited. USDA data shows the U.S. had about 876 million acres of land and farms in 2024, including roughly 328 million acres of cropland. And that supply has been gradually shrinking. So you're looking at an asset with something investors absolutely love: limited supply. When something is scarce and people will always need it, the economics become very interesting. Here's where farmland becomes more than just a piece of property. Imagine you own 1,000 acres. You don't necessarily have to farm it yourself. You can lease the land to farmers. The farmer grows crops. The farmer earns money. And you, as the landowner, can receive rent. So instead of owning an asset that simply sits there, you own an asset that can potentially generate income. And there's another layer. The land itself can appreciate. According to USDA data, average U.S. farm real estate value reached around $4,350 per acre in 2025, up 4.3% from the previous year. So the business model can have two potential engines: income from the land and appreciation of the land. That's a very different game from simply buying something expensive and hoping someone pays you more for it later. Now think about something you probably did today. You ate, and you'll eat again tomorrow. Whether the economy is booming, whether the stock market crashes, whether interest rates rise, people still need food. That's what makes farmland psychologically interesting to wealthy investors. You can delay buying a new phone. You can postpone buying a car. You can stop renovating your house. But you can't permanently stop eating. Food is not a luxury product. It's a basic human requirement. And that's why farmland can behave differently from many other assets. It's connected to something much bigger than financial markets: human survival. As populations grow and diets change, demand for agricultural production can remain structurally important. And here's the part most people miss. The value isn't necessarily in the crops themselves. The value can be in owning the productive land that allows those crops to be grown. Here's a simple rule of investing. When demand increases, you generally want to own something whose supply can't easily increase. Think about Bitcoin. There is a fixed maximum supply. Think about beachfront property. You can't create another coastline. And think about high-quality farmland. You can't instantly create another piece of land with decades of soil development, water access, favorable climate, and established agricultural infrastructure. That's scarcity. And scarcity can create pricing power. This is one reason farmland has attracted institutional investors, pension funds, endowments, and wealthy individuals. It's also why farmland is increasingly being treated as an investment asset, rather than simply a place where farmers grow crops. But here's the part billionaires understand. Owning farmland doesn't automatically make you rich. This is where social media gets things wrong. Farmland isn't some magical money machine. Farm income can fall. Commodity prices can crash. Droughts can destroy yields. Interest rates can increase borrowing costs. And land can be extremely difficult to sell quickly. It's not like selling a stock with one click. But wealthy investors aren't necessarily looking for something they can flip next week. They're often looking for something they can hold for decades. That's the difference. A billionaire can think, what will this land be worth in 20 or 30 years? Instead of, can I make 20% this year? That's a completely different investment mindset. And now we reach the most important idea. The business behind farmland isn't necessarily farming. It's owning the infrastructure around food production. Think about it. A farmer needs land. The land needs water. The crops need equipment. The harvest needs storage. Then transportation. Then processing. Then distribution. Then eventually, your grocery store. So when you move backward through the food chain, farmland sits near the beginning of an enormous economic system. And that's why ownership matters. You don't have to own the grocery store to participate in the food economy. You don't necessarily have to sell the food. You can own one of the fundamental assets required to produce it, the land. Here's the question you're probably asking. If billionaires are buying farmland, how can an average person participate? You don't necessarily need hundreds of millions of dollars. There are farmland investment companies and platforms that allow investors to gain exposure to agricultural land without personally purchasing thousands of acres. Some structures offer fractional ownership or pooled investments. But there's an important warning. Farmland is not risk-free. Before investing, you need to understand the property, location, water situation, tenant, lease structure, fees, taxes, financing, liquidity, and how returns are actually generated. Because buying farmland isn't enough. The quality of the farmland matters. 1,000 acres of incredible farmland can be worth dramatically more than 1,000 acres with poor soil and unreliable water. So why are billionaires buying farmland? It's not necessarily because they want to become farmers. It's because farmland combines several things wealthy investors love: scarcity, real-world utility, potential income, long-term appreciation, and most importantly, something humans cannot live without. But there's an even bigger lesson here. Most people think wealth is about owning expensive things. A mansion, a supercar, a private jet. But serious wealth is often about owning productive assets. Assets that generate cash. Assets that are difficult to replace. Assets that can survive changing trends. And farmland fits that idea surprisingly well. Because while technology changes, apps disappear, companies go bankrupt, and entire industries get replaced, one thing remains true. People have to eat. And if you own a piece of the land producing that food, you're not just owning dirt. You're owning a piece of the system that feeds the economy. And that may be the real business behind farmland. So the next time you drive past a massive American farm, don't just look at the fields. Ask yourself, who owns the land? Because sometimes, the biggest business isn't selling what's growing on the land. It's owning the land itself.